Our guest is an Apple bear who thinks that, sure, the results may be impressive in the latest quarter. Valuation is still a problem. We're joined by William Kerwin, senior equity analyst at Morningstar Research, who has a sell rating on the stock. I said before the break it might be the only one. Apparently, there are a few others, but they're few and far between. William, thanks very much indeed for joining us. You think the stock price is frothy. Can you tell us why?
Ultimately, yes. And this comes down to a classic case of an extremely high quality company where the valuation has just gotten a little challenging in the market for us this year. This really comes down to our expectations on the iPhone, which is the bellwether for Apple's overall results, at about half of its total revenue. And we observe that iPhone growth, its revenue growth, is slowing over time and decelerating from maybe the levels that we once expected it to be at 5 or 10 years ago. And so that really is the main point of our bearishness on valuation. And I'll also add that at the latest quarter, we actually raised our valuation up to $240 a share. So we're a little bit less bearish than we once were maybe earlier in the year, but that valuation still looks a little rich to us.
The iPhone, of course, has been the engine of the company for years. What would be your concern there? Is it partly growing competition from Chinese devices, for example?
That's one element of it. We certainly see where China used to be a growth tailwind for the company. We now actually see it as a bit of a headwind with ramped up domestic alternatives there. But even in Apple's core markets in North America and Europe, the Western markets, so to speak, we see that updates have been largely evolutionary over the past few years rather than revolutionary. And that may change this year. This is the first new form factor we've seen in a while with the iPhone Air, but we think that the Pro models, that flagship, will continue to drive results. And we expect really strong growth this year, actually, in 2026. But we see this more as pent-up consumer upgrade demand rather than anything revolutionary that's happened in the design of the core model.
What about the AI strategy? They're seen as something of a laggard, but of course, never pays to underestimate Apple. But is that a problem for the company?
We don't think it'll be a problem for a long time. We think ultimately they will catch up. Now, there's been a lot of news and headlines about them being a laggard in this strategy. We actually think that quietly they've improved their position over the last year, despite what the marketing from competitors like the Samsung Galaxy or Google Pixel would have you think. We actually don't think Apple's AI capabilities on the iPhone are that far behind. But compared to what it's promised close to 2 years ago now, it has underdelivered. And so we think that there's a deep effort internally to turn that around. We think they will succeed there. We think that a partnership strategy with the likes of an OpenAI, with the likes of a Google Gemini, will be the way to kind of fix that rather than relying on Apple building its own models that can beat the rest.
And they're bringing their chip design in-house. Will that, it sounds like an enormous task. Will that make a big difference?
It already has made a big difference. This is one of the greatest things we think Apple has done over the past decade. If you think about 10 years ago, it was using Intel chips in the Mac series. It was using other chips in the iPhone. Now they design all of their own chips in the iPhone, the Mac, the iPad, even going down to the Vision Pro. And that's just at the core processor level. So what we see going forward over time, and what's already started, is that now the other auxiliary chips, if you will, the radio frequency components, the wireless chips in the iPhone, in the watch, in AirPods, for example, now Apple is bringing those under its own design prowess. And what this does is it gives the company a little bit more control, a little bit more flexibility, and higher profitability because it doesn't have to pay an external supplier for those chips.
Let's put up a 10-year chart for Apple. What price would you get more interested in Apple? What price do you think would be more reasonable? Right now, it's about $271.
Well, our valuation is $240 a share. So we think that's a fair price for the stock based on our growth and profitability forecasts going forward. And, I think it's fair to say that Apple hasn't even done significantly well in terms of share price appreciation this year when you compare it to the other Mag 7 stocks. But we think that there's still a lot of optimism baked into the share price right now. It looks like some of that optimism is bearing out in the near term, but we really focus on the longer term, and we still think that with the China headwind to growth and with this more evolutionary growth in iPhone features, we still observe that decelerating growth over time, and that just gives us some caution with where shares are at today.
There was talk that they might come out with a cheap computer. I think I saw a price that could be below $1,000 US. Is that a sign of weakness, or could it be a productive move? Because of course that relatively high price of their products over the years has helped to boost profits.
Yeah, I don't think it's a source of weakness. I think this is going after a little bit more maybe the education market, moving down market to compete with Chromebooks is what it seemed like the target was. But I'd also approach that with some skepticism. There are always a lot of reports about new models or new products that Apple is working on. We really think about them having these underground labs in Cupertino where they're working on tons of these projects at a time. Very few of those actually come to light. And so if it does pursue this and bring it to market, we think it would be, a relatively successful product, but not a huge needle mover for Apple relative to those premium MacBooks. But it remains to be seen.
There's a story today, Mark Gurman of Bloomberg, I'm not sure if you saw it, that Apple is near a deal under which it would pay Google $1 billion a year for help overhauling for AI technology to help overhaul the Siri voice assistant. This apparently they pay that money until they can get their own AI technology in gear. So it sounds like they're really taking this AI challenge seriously.
They are. And this isn't a huge surprise to us. And, you have to put it in the context of Google is paying Apple over $20 billion a year by our estimates to be the default search provider in its product. So I don't think this is necessarily actually Apple paying any money. I think it's maybe just taking a $1 billion discount on those payments that Google is already providing. And as I said earlier, we think this is the right strategy for Apple. We think that Apple's prowess in software design and product design are really in creating strong features that consumers can use, not necessarily in providing the best and greatest and continuously updated large language model. So we think partnering with someone that can do that in Google and then focusing on how to integrate that into features and products that users love is the right strategy here.
William, thank you very much indeed. William
Thank you.
Kerwin, Senior Equity Analyst at Morningstar.